Hi, it's Thomas Cook from Toronto's real estate team at RE/MAX Hallmark, and here is our July 2011 Toronto Real Estate Market Report. July was a great month overall. The average sale price was up compared to 1 year ago, but the listing inventory was lower. We're going to talk about the effect of a drop in the ratio of sales to listings, or, as they say in Miami, the percent chance of selling, on the marketplace as we go through this month's report. So let's look at some of the July Toronto Real Estate Board statistics. July MLS sales totaled 7,922 houses and condominiums in all the districts and came in as the fourth best July in TREB history. Just under 33% of the market sales were condo townhouses and high-rise suites. This ratio has barely changed over the past decade. Sales for the first 7 months of this year totaled just under 56,000 homes, on track to have an annual sales result close to 90,000. That would put 2011 in close competition to become the second best year for sales in the Toronto Real Estate Board's history. The July average sale price came in at $459,122, up 9.2% from 1 year ago and up 7% from the first 7 months of 2010. East of Yonge and south of Bloor in the CO8 downtown TREB district, the condo sales price average was $383,360, while west of Yonge in CO1, the average was $406,208. The low listing inventory has been a major problem all year, and just maybe that's now slowly beginning to change. As you can see from the graph, new listings in July were higher than 1 year ago for the very first time in 2011. Let's hope the trend continues, and more houses and condos are brought onto the fall market, giving buyers more choices. Sales in July were up 20.7% from July 2010, while the listing inventory was the second lowest since 1999. There were just over 19,000 fewer condos and houses on the market this year compared to last. The sales to listings, or percent chance of selling ratio, is how we determine what type of market we're actually in. 24 to 28% is a neutral market, below 24% is a buyer's market, and above 28% is a seller's market. In July, that ratio finally came down by about 11% to settle at 45.1%. Still a seller's market, but not as frantic as it has been since March. That figure is actually up 15% from last July, when the combination of increased interest rates and the implementation of HST were a damper on the real estate market. Mortgage rates have edged down again, and the 5-year fixed mortgage can now be had for just around the 3.75% mark. The average sale price in July was up 9.2% year over year, but down 5.4% from May, the high point in the spring market. As you can see from the graph, and looking at the results for 2008, 9, and 10, this is an annual event and does not mean that prices overall are declining. It's just the usual market cycle taking effect. Many of the participants in our market are either first-time buyers taking advantage of the low interest rates or investors who are liking real estate more than the fickle stock market. Since neither of these market segments generally list homes, inventory numbers have remained lower than normal. The difference in the average sale price and activity east and west of Yonge Street and south of Bloor in the prime downtown condo markets increased to almost $23,000 this month, the widest gap we've seen this year. Downtown condo average prices were up 6.2% in CO1, west of Yonge and south of Bloor, and up by a significant 8.2% in CO8, east of Yonge and south of Bloor, compared to 1 year ago. This month, the condo market has underperformed the overall market in terms of year-over-year appreciation. The ratio of sales to listings was 33.6%, a moderate seller's market in CO1, and a busy 48%, a strong seller's market in CO8. The main reason CO8 is doing so well is the lack of inventory once again. Condo listings are down a remarkable 28.7% from 1 year ago, the fourth straight month where this has happened. Whereas in CO1, the listing inventory is actually up by 12.3%, mainly due to more brand new condo suites coming on the market west of Yonge, especially in the month of June. In the first half of this year, across the GTA, there were over 10,000 new condo units completed, up 65% from the same period last year. This increased supply will moderate the annual rate of condominium price growth going forward, especially in CO1. Now, the press always seems to talk about affordability, as if buyers are in danger of getting themselves in over their heads in terms of mortgage debt. First of all, it can't happen because our stalwart Canadian banks won't lend money to people who can't afford to pay it back. The lending guideline of 32% of a buyer's gross income to pay mortgage principal, interest, realty taxes, and 50% of utilities hasn't changed for many years. This mortgage payments as a percentage of income chart from TD Economics shows that Toronto is doing quite well compared to the Canadian home affordability average, and is way better than the 53.9% ratio in Vancouver. So where are the opportunities available to Toronto home buyers and sellers this month? Well, because of the economic situation in Europe and the congressional stupidity in the US, interest rates are expected to remain very steady now for at least 6 months and most likely longer. The US Federal Reserve is saying interest rates there will remain low for probably another 2 years. We can now arrange a 5-year, 30-year amortization mortgage with a 3.75% interest rate. With that rate, you'd pay approximately $4.60 monthly per thousand of mortgage. So therefore, a $300,000 mortgage would cost about $1,380 monthly. A terrific opportunity for buyers to take a look at what's available in interesting neighborhoods is to join one of our market experience tours. They go out daily and are customized to specific areas of the city and price ranges. Go to dailytorontohometours.com, that's dailytorontohometours.com, and put in the ideal day and time for the tour you'd like to join. Are you a bit curious as to what most Toronto buyers and sellers are looking for and appreciate in the realtor they decide to work with? Check out whatyousaidaboutus.com. That's whatyousaidaboutus.com. And take a look at what people are saying about their real estate experience. All the best, and check back here in early September for the August Toronto Real Estate Market Report.